The balance sheet had to balance, right? Your assets had to equal liabilities plus equity. Assets were things that could be turned into cash. Current assets were things that could be turned into cash within how long? A current asset is anything that can be turned into cash within what time period? A year, 12 months. Probably see that, so I would probably make a note to remember that. Liabilities are the things that you owe. Equity is your retained earnings, your share capital on that stock side, if you will. Or you'll hear stocks referred to as equities if you're investing. Bonds will be what we call fixed income. And then the income statement is basically the revenue, which is all the money coming in, minus all the expenses, which is all the things that you're going to pay, all the money going out. And what's left over is your profit, or net income. So the difference between the balance sheet and the income statement is that. So if I wanted to find out the assets, liabilities, and equity for a firm, and you're Mike Spikes, I could go to my balance sheet. And I would see here, this was the screen I could go to. Here's my current assets, cash, finished goods inventory. Why is that a current asset? What is it? What is finished goods inventory in Mike's bikes? The bikes were made and they didn't sell. So they're ready. They're going to be easy for you to sell if you need to. And so that's finished goods inventory. Total assets, current assets, which could be turned into cash within 1 year. Non-current assets, there's the value of your plant. Accumulated depreciation, that's an accounting term for how you're going to write that off. So you can see that's $13,987,192. And in my current liabilities, my short-term debt, I don't have any. Company tax here. If I had long-term debt, it would show up there. There's my total liabilities. There's my total equity. You add those two together, you get $13,987,192. And that matches your total assets, $13,987,192. They balance. Now, if I want to find the profitability, this is your income statement. And this is the same thing I put on the board on the second day of class. Here's our revenue. Here's our cost of goods. This is our margin, also known as our, heard me reference it, spendable income, spendable revenue. And you got all of your different things here, your expenses, more expenses, and then down here you got cash in the bank that's earning you interest, so you add that in as a revenue. And then you should, so there's your profit before tax, there's your income tax, there's your profit after tax, or your net income.
So, go back to the last section.
The balance sheet?
Yeah, this one?
Yeah, let's make it, yeah, let me know when we get it. Alright. Now, two good ways to analyze your financial performance. Earnings per share, which was just simply how you're doing. It looks internally. And it's looking at your net income divided by the number of shares outstanding. That's your earnings per share. We spent a lot of time on this on Wednesday, and we're deciding that that's how you're going to make your dividend decisions. So it's an internal look, but you can compare your earnings per share to others. But if you want to know why others are doing better than you need to look at your return on sales. So this helps you compare yourself to the competition. Because you may have less sales, but if you're able to turn that into the same amount of profit, that's really good. Whereas if you have more sales than other people and your profits aren't as high, they're more efficient in their spending. you've got some expenses in there that maybe you don't need. So return on sales can help you identify that. You take your net income and you just divide it by your sales revenue. And so I think there's a lot of you that probably need to use this formula when you're trying to decide, are we doing the best we can? Because this is going to let you do a bit more of a comparison. How well do you generate your sales and turn it into profit compared to your competition? Your shareholders will want to know that your earnings per share is increasing each year. That's a good sign to them. That means there's more potential for dividend, there's more profitability in the company. This company's in strong financial footing as their earnings per share has been going up every year. Internally, you will want to know how you're doing against your competition. And one good way to do that is look at that return on sales. Okay. All right, I need you to get this pretty quick. It's time to change gears. We got to get into MIS. All right. I just briefly wanted to show you this. I gotta be quick. We've looked at this before. This is a Dillard College of Business degree plan. So some of you that use DegreeWorks, it's not quite this clear than if you just look at the paper copy. But it doesn't matter if you're economics, finance, accounting, management, marketing, general business, doesn't matter. Everybody takes the same top left. Everybody takes the same top right. That's where you'll see the financial and managerial accounting, the macro and the micro, and then you'll see an MIS class right there. And then down the bottom left, everybody takes, in the business college, takes the same bottom left. You got another MIS class as well as some others. Because in the bottom right, your last 39 hours or so are really where you dive into your major. So if you want to major in MIS, you're still going to take all the same classes that the economics, finance, general business students take. Then you're going to go over here and take classes in like business programming language, database design and management, networking and telecommunications, business analytics, business systems analysis. Then you have to choose between project management, e-commerce, web application development, advanced Excel, all of that. Why is that important? Because I want you to see the classes that we're talking about here. Because as we go in and talk about MIS, too many times people make a mistake because they think MIS is the same as computer science, and it's not. And so we're going to go through quite a few slides, some of them quicker than I would probably like to get through it today. But be catching some of these important notes. So we're going to go through, we're going to talk about all these different components. You don't have to write this down, but pay attention. The second quarter of 2022 that ended in June. Retail, e-commerce, so web sales, were up 2.7% from the first quarter, and it's now $257.3 billion, which is about 15% of all retail sales are now conducted over the web. Do we think that's going to go down in the future? Of course not. So we have to be thinking as businesses, how are we preparing ourselves for that change? Because I expect that to probably grow to 25-30% in the next 2 to 3 years. The pandemic has accelerated that, and that's going to continue. There were over 15 billion phones in the world last year. I don't know what the cap is on that number, because at some point you kind of reach maximum global population. So I don't know that it will go up exponentially, but it's going to become everybody has one, and being able to make sure that your business is ready for that is going to be important. So, again, you don't even need to write this down. But information, you're going to hear me talk a lot about data and a lot about information. Information is what we want. But too often, the information we have is not what we want. It's not what we need. And the actual information that we need is not available. And so, as we get into the definition of MIS, I want you to remember what the end goal is, and it's useful information which can be used for businesses to make good decisions. Because information is scarce. It does have a cost. It does have alternative uses. And there's an opportunity cost. Now, if you think back to economics, I told you there were 3 main types of resources. Do you remember what they were? Say it, it's okay. Human, labor. So we've got human resource, money, capital. And what was the last one? Natural resources. The 4th one is actually data. Oil has always been a natural resource. Data is becoming a new version of what the oil industry was. It's going to be huge. And that's not going to change. Because information is a resource. And it's scarce, and people want it. We want to be able to know if our monthly sales drop or an expensive advertising campaign goes bad, what did we learn and how can we prevent that from happening again? We need business intelligence solutions to guide us. And that's what MIS is going to do. So in MIS, the textbook definition is the study of people,